for particular period or particular predetermined payment. So this is called as a lease rentals. So lease is an agreement. So simply I can say that it is an agreement between two parties, that is lessor and lessee, for the using of an asset or asset for predetermined price. So a lease agreement, it is legally binding a document, outline the terms and conditions under the which the lease can use the asset. It defines the rights and responsibilities of both lessor and lessee. So this agreement before entering, what type of assets they are going to use and give, and what is the price for the using of that asset, and what is the duration of that period, that entire details are going to be included in the lease agreement. This lease is commonly used for the acquiring of high value assets like land, building, vehicle, equipment, machinery, without making of outright purchasing. Instead of purchasing that property or buildings or equipments, we are going to take that high value assets as a rental basis. So for the purpose of using that properties, lessee can pay the rental to the lessor. What is the essentials elements of lease? So here some following are essential elements. Generally, we are going to observe that. So here two parties are involved. Two parties are involved. So there must be two parties in this lease agreement. One person is the lessor, he is nothing but a owner, and another person is the lessee, is the user. Generally, owner can give the right to use of his property to the lessee. So lessee, he can use the property whatever received by the lessor, and lessee is going to pay the periodical payment. So asset or property. So here asset or property, it may be tangible assets or intangible assets. He is going to use. So here asset or property must be used by the exchange. Here he is going, let's say, going to pay the money, and lessor going to transfer his property for the using purpose only, not the ownership. So that is the asset or property you are going to observe. Ownership, the lessor retains the ownership of the asset. Generally, whoever the owner is there in this agreement, the ownership of the property he kept with himself only. Lessee gets only right to use of it. It's not the ownership. So lease term, generally the agreement must be specified the duration of the lease time. So this lease rental generally long term only, in long term generally we are going to observe that lease rentals also payment terms must be clearly stated monthly or quarterly or annually. So this use of assets they are going to use the use. Hello, Sai. Sorry. Okay. Right. So lease term, the agreement must be specified duration of the lease, and lease rental payment term must be clearly stated that monthly or quarterly or annually. Use of asset, the lease must be defined purpose of and manner of asset uses. So whatever the property we are entering to the agreement, that property what purpose they are taking, so how they are going to use that, all the details we need to include that agreement. Consideration, lease must be involve a valid consideration. So consideration means what? Something payment or something written. So generally here lessor can receive the consideration from the lessee. So it is nothing but a lease rental. Generally it is defined that is a lease rental. And termination of clause. So conditions under which lease can be terminated must be mentioned. So conditions mean what? Termination clause means what? So when as per agreement, if lessee failed to pay the rentals to the lessor, so that contract may be going to be terminated. If the lessor also lessor when is not able to provide the any asset or property to the lessee, so that is also going to be clause. So simply here we have to understood only thing as per the lease agreement. If both parties are performing or not, that we are going to check it. If they're performing as per that agreement and conditions, then okay, that contract can be moved forward. Otherwise, it is going to be terminated. Renewal option. Provision for renewal or extension may be included. So generally in the lease agreement, they are going to mention also. And maintenance and insurance. It is responsible relating to the upkeep the and insurance should be stated. So generally this maintenance and insurance based on conditions it is going to be mentioned. So based on type of lease also it is going to be included. So these all are the valid essential elements of lease. Next, types of leases. See, types of leases. Generally, lease we can classify it into two categories. First one is the finance lease and second one is the operating lease. Finance lease also called as a capital lease. So generally, other types of lease also we are going to observe, that is sale and lease back, leverage lease, cross-border lease, service lease, net lease and full service lease. These are the different. But as per our syllabus, only very important leases, that is finance lease and operating leases. Okay. Right. First, I will explain about the finance lease. Then I will explain about the first I will explain the operating lease. Then I will explain the finance lease. Operating lease. Generally, this lease can involve very short-term lease, where the lessor retains the most of the risks and rewards of ownership. It is generally cancelable and more flexible. See, generally operating lease is a short-term lease. And that related all the risks and rewards, it can be kept by the owner itself only. Okay, owner is nothing but a lessor. And is there any maintenance expenses? Is there any additional charges? So that all are paid by the lessor only. It is generally cancelable and more flexible for the both the parties. And what is the features or characteristics of operating lease? So first one is it is a short-term duration compared with the asset use of life. And the lessor provide the services like maintenance and insurance. So here owner only provides that maintenance expenditure and insurance related expenditure also. The asset is returned to the lessor at the end of the lease. So here, as earlier, whatever I explained, that two parties involved in the lease. So one party is giving the property to use of another party, using for another party. So here owner is a lessor and the user is a lessee. Once the agreement is completed, lessee must and should be returned the property to the lessor. So at the end of the time of lease. And lease payments do not cover the full cost of assets. So in operating cost, whatever the cost of the property, whatever the cost of the asset is there, operating lease, it cannot be covered fully. Only certain proportionate some amount only it is going to be received. And common equipment rental and vehicle leasing. So generally it is generally we are going to see monthly using purpose, yearly using purpose we are going to give. So examples of renting computers, vehicles for 2 years, maintenance are provided by the lessors like this. And next one is the finance lease. So what is the finance lease? Finance lease also called as a capital lease. So it is a long-term and it is non-cancelable lease. And let's see, assumes that most of the risks and rewards associated with the asset ownership only. So here, generally, finance lease is a long-term lease, and it is also non-cancelable lease. And here, asset transferred from owner to user. And at the same time, risks and rewards are also going to be transferred. So that is the finance lease. What is the characteristics of finance lease? So the lease term covers the major portion of the asset useful of life. The lessee is the responsible half an hour. The lease is the responsible for the maintenance, insurance, and taxes. The lease is a non-cancelable during the primary lease period. The asset may be transferred to the lessee at the end of the lease time. And lease payments are structured and recover the full cost of assets plus profit also. Generally, this leasing is, we are going to give the long-term purpose only. For example, leasing the machinery for the 10 years, where the lessee use it is fully and pays off all associated cost. And what is the difference between operating lease and finance lease? So this is the very, very important. This is a very, very important. What is the difference between finance lease and operating lease? So here, first one is the ownership. In finance lease, risk and rewards transferred to the lessee. But in operating lease, the ownership and risk and rewards not going to transfer. Risk and rewards are kept with the that owner itself only. Duration. Finance lease, it is generally long-term basis. But in operating lease, it is only short-term only. Cancellation. Generally, finance lease is a non-cancelable agreement, non-cancelable lease. But operating lease, it can be cancelable at any point of time. When they're not performing as per the agreement, they can cancel any point of time. Maintenance. Lessee responsibility for all the maintenance. So like insurance and maintenance expenses in the financial lease. But in operating lease, lessor may be provide the maintenance. Lessor may be provide the maintenance only. And asset cost. So full cost recovered during the lease term, and in operating lease, partially cost recovered. Only certain amount only it is going to be recovered. But whereas in finance lease, maximum amount, the property cost going to be recovered. Accounting treatment. The asset shown in the lease balance sheet only in finance lease, but operating lease treated as an expenditure in leasing books. That the duration, generally example, leasing of machinery for 10 years in finance lease and renting a car of 1 year, that is a operating lease. What is the advantage and what is the limitations of the leasing? So first I will explain the advantages. No need for the large capital. Generally, when you're taking the any asset as a lease, no need for the large capital. Lease can use the expensive asset without full upfront of investment. Flexibility. Leases can be structured according to their business need. Sorry. Flexibility. Lease can be structured according to the business needs. The tax benefits, lease rentals are tax deductible only. And absolvency of risk. In operating leases, risks of absolvency remains with the lessor, and better cash flow management spread the cost over time. Convenient financing. So convenient financing, alternative loan and assets are purchasing, and preserve credit lines does not affect the borrowing capacity as much as loan. Limitations. So higher long-term cost. The total lease payments may be exceed the purchase of cost. The no ownership. Lease does not lease does not own the assets unless the purchase of option included. Contractual obligations. Lease must be compliant with the lease terms. Early termination may involving the parties. Limited customization. Restriction on assets modification uses. Depreciation benefits and lease cannot be, sorry, limitations. It can be involve the high long-term cost, and also lessee does not own the assets unless the purchasing option included, and contractual obligation. Lessee must be compliant with the terms. Early termination may be involve the penalties, and limited customization, restriction on asset modification or usages, and depreciation benefit lost, and meaning of hire purchase. Next one is, so uh this is the chapter 4 talking about the, yeah, this is the chapter 4 unit 4 lease, and next one is the hire purchasing. Fifth chapter is hire purchasing. What is the meaning of hire purchase, and what is the terms and agreements under the hire purchase? So let us discuss. Hire purchase. Yes, see. So actually, hire purchase is a method of financing where the buyer hirer takes the position of an asset by paying off initial down payment and agree to pay the remaining amount of regular installments over a period. So simply hire purchase means what? See, generally consumers, they will buy the products. Sometimes when the consumer is not able to pay at a time of amount, some companies, they will give the option to the consumer. So that is certain amount at the time of we consumer need to pay the, it is as a down payment. Remaining amount installment basis, in future, the consumer is agreed to pay that. So that is called as a hire purchase. Generally, we can observe that automobiles, auto cars, and washing machines. So anything, whenever you pay some certain amount, 20 to 30%, as generally the down payment, it may be less than 25% only, the companies will accept. So hire purchase means what? It is a method of purchasing of property which is given option to the consumer by the companies, and consumer also agree to pay the certain amount as a down payment, and remaining amount is going to pay the installment over a period of time. So that is called as a hire purchasing. Generally, ownership of assets remains with the seller only, and until all the installments are fully paid, the ownership cannot be transferred. Once the final payment is made, the ownership is going to be transferred to the hirer. So simply here, for example, we purchased one car. So generally 2 lakhs or 3 lakhs, certain amount we are going to pay as a down payment. Remaining amount installment basis we are going to pay. So the car company, when we pay the down payment, they deliver the asset, but not the ownership. When they will transfer the ownership, only at the time of completion of all installments, then only they are going to pay the ownership. They are going to transfer the ownership. So that is, it is a method of hire purchasing. It is commonly used for the acquiring of consumer goods, automobiles, machinery, and equipment. What are the terms of the agreement under the hire purchase? In a hire purchase agreement, it includes some following key terms. That is, parties involved. Generally, in hire purchase, there are two parties involved. That is, owner is owner, just seller to be treated as a owner or financer, and hirer, buyer. So buyer is consumer. And next one is the description of goods. So details of information about the asset being hired. So what type of goods we are purchasing and what type of goods related we are selling. So that only we are going to mention. Hire purchase price. What is the total price? Includes the total price includes total price payable includes down payments plus all installments also. What is the meaning of down payment? Down payment, it is an initial lump sum payment made at the time of agreement by the buyer to the seller. So that is called as a down payment. Installments. So after payment of down payment, whatever remaining amount we are going to, whatever remaining amount is due with the customer, that all the amount equal payments is agreed to pay that. So whatever the amount is going to pay, that it is nothing but a equal installments. So installment is nothing but a number, amount, and frequency of payment, monthly or quarterly. Ownership class. Ownership here in hire purchase method, ownership remains with the seller only until the last installment is paid. So when the down payment is paid by the buyer, the owner or financer will transfer, owner or buyer, the owner or financer will send the goods and buyer also going to use. But when they send the goods, they will not send the ownership. When they will send the ownership, when they all are completed, when they completed all the installments, final payment is completed, then only ownership clause will be transferred. Default clause. Rights and remedies if the higher defaults on payment is. So when the buyer is failed to pay the installments, seller can have some rights. He get back his property. Termination of clause. Under the either parties can terminate the agreement. Reposition of the rights. Sellers are right to reposition of the goods if the hirer defaults. Option to purchase. After final payment, hirer has a right to own the asset. Hirer means what? Buyer. And types of hire purchase. Consumer hire purchase, industrial hire purchase. Generally, hire purchase we classified that is two categories: consumer hire purchase and industrial hire purchase. So consumer hire purchase means what? Used by the individuals to acquire the consumer goods like electronics, furnitures, two-wheelers, etc. So that is consumer hire purchase and regulated to the protect of consumers. The hirer use the asset for personal or domestic purpose. And industrial hire purchase used by business to the acquiring industry assets such as a heavy machineries, machineries, vehicles, office equipments, etc. Structure for the business needed may be include the tax benefits and often arranged through the hire purchase financing companies. So what are the advantages of hire purchase? So if you purchase any property or any asset, buyer have a choice to immediate use of asset. So buyer get the position immediately without full payment. And convenient installment. The payments are spreaded over time. So easing the financing burden. So immediate use of means what? For example, we purchased one asset. That asset cost is 10 lakhs. If you pay the 20%, 2 lakhs also, without payment of remaining 80%, the buyer gets the position of immediately without full payment. He can use the asset also. And convenience installment. Convenience installment payments are spread. That installment, whatever is there, that total amount is going to spread over a period of time. So buyer doesn't have any financial burden also. And simple financing option useful for the individuals or small business lacking the upfront of capital and improve the cash flows, preserves working capital for the other options. Ownership option. Ownership is transferred at the end of the agreement. Easy documentation. Less complex loan is maybe included that. So this is the advantages. What is the limitations of hire purchase? So limitations of hire purchase, it is higher total cost. The amount paid higher than the cash price due to the interest. Generally, if you purchase any asset, generally in cash basis, only the cash price only we are going to pay. So not more than we are not going to pay. But in case of hire purchase method, so whatever amount we are paying that down payment after that installments, that installments that installments includes the interest also and ownership delay. Generally, when you purchase any asset, you're going to pay the total amount immediately and you'll get the immediately ownership also. But legal ownership transferred only after the financial installment in the hire purchase. Risky of reposition. So asset can be repositioned, default, causing of loss are paid by the installments. No right to sell. Generally, hirer cannot sell or transfer the asset until ownership is transferred. So here, for example, I'll give the one example. When you purchase any car or any other automobile, so when you completed that entire installments, then only you are able to get the NOC, non-objection certificate. You can sell your property to whenever you require. But in hire purchase, until the completion of total installments, you cannot sell also. Hirer cannot sell. Liability for the maintenance. Hirer bears the maintenance cost during the agreement. Complete cheyana? 5 minutes to complete. Hire purchase versus installment purchase. What is the difference between hire purchase and installment purchase? So in hire purchase, seller can repossess the asset, but installment purchase, seller cannot be repossess the goods. See, installment purchase, when you sell the goods, the ownership also going to transfer. So that is the reason seller cannot be repossess the goods. Legal status. Hirer is not the owner of the until the final payment. But in installment payment, buyer immediately become a owner and applicable of law governed by the Hire Purchase Act where the applicable, but installment purchase governed by the Sale of Goods Act as per the 1930s Act. And depreciation claim by the owners, seller only, but installment purchase claim by the buyer. And risk and responsibility lies with the owner until the ownership transferred. So this is the difference between hire purchase and installment purchase. Next class, I'll explain venture capital.